Okay, so imagine you've just been handed a list of a country's economic data. Right now, it's just a jumble of numbers. Our mission, if you choose to accept it, is to take this puzzle, piece it all together, and figure out two massive things: its gross domestic product and its total national income. Let's dive in. So here's our game plan. First, we're going to lay out all the clues we've been given. Then, we'll solve for a really key variable, government spending. That's going to set us up perfectly for the main event, calculating GDP. After that, we'll refine our number to get a clearer picture. And finally, we'll solve the whole case and find the country's national income. You know, every good investigation starts with a case file. And this list of economic indicators, well, this is ours. Right now, it might just look like a bunch of random numbers, but trust me, these numbers are about to tell us a really clear story. So these are our clues. Let's take a look. We've got private consumption, or C, at 800 million. Gross investment, IG, is 250 million. Then we have a couple of figures for government activity, numbers for trade with other countries, and this interesting one at the bottom called depreciation. Every single one of these is a critical piece we're going to need to solve this thing.
All right, first things first. Before we can even think about getting to GDP, we need to figure out the total government spending, which we call G. This is going to be a quick win for us, a satisfying first step that gives us a key ingredient for the main calculation.
So what exactly is G? It's actually pretty simple. It's just the sum of two things: all the money the government pays its employees in salaries, plus all the money it spends buying stuff from private companies. That's it.
And the formula is just as straightforward as the definition. We literally just add those two numbers together from our datasheet. So, let's do it. We take the 190 million for government salaries, we add the 110 million for government purchases, and boom! We get a total government spending, or G, of 300 million. First piece of the puzzle, solved. Easy, right? And now for the main event. With G officially in our back pocket, we have everything we need to calculate the big one, gross domestic product, or GDP. This number represents the total value of everything produced in this economy.
Now, to find GDP, we're going to use a really core idea in economics. Sources must equal uses. Think of it like a country's bank account. Everything that comes in, that's what we produce ourselves, our GDP, plus what we import, has to equal everything that goes out. And what goes out? Well, that's what we consume, what we invest, what the government spends, and what we sell to other countries as exports.
First, let's calculate the uses side of that equation, how all the spending adds up. We just plug in the numbers we know, 800 for consumption, 250 for investment, our shiny new 300 for government spending, and 420 for exports. Add all that up, and we get a total uses of 1,770 million. Okay, now we can finally solve for GDP. Since sources equal uses, we know that GDP plus our imports has to equal that 1770 number we just found. So we plug in 340 for imports, do a little bit of simple algebra, and that gives us our gross domestic product.
And there it is. The gross domestic product for this economy is $1,430 million. This is a huge milestone. It's the total market value of all the final goods and services produced in the country for that year.
So why do we call it gross domestic product? It's a great question, and the answer is actually really simple. It all comes back to a number we used earlier, gross investment. Because that initial figure for investment was gross, our final result for the whole economy is also gross. The terms are directly linked. It's a small detail, but a super important one.
Speaking of that, our work isn't quite done. Gross is, well, it's a bit of a blunt instrument because it doesn't account for the wear and tear on things like our machinery and buildings. So to get a more precise, a sharper picture, we need to go from gross to net. And this is where that idea of depreciation comes in. Our data sheet listed it as 100 million. Think of it like this. Your car gets older, your phone becomes outdated. They lose value. Depreciation is just the number that accounts for that same loss in value for an entire economy's equipment and buildings. It's the cost of using up our stuff.
And the formula to get from gross to net? Oh, it's wonderfully simple. You just take the GDP we already calculated and subtract the value of that depreciation. What's left over is what we call the net domestic product, or NDP.
So let's do the math real quick. We take our GDP of 1,430, we subtract that 100 for depreciation, and that gives us our net domestic product. And there you have it. Our net domestic product is 1,330 million.
This number is a more refined measure of economic output because it actually accounts for the capital that got used up just to make everything.
Okay, we're on the home stretch. We've calculated what the country produced, both the gross number and the net number. Now for the final step, figuring out what the country earned. Let's uncover the national income.
And here's the most elegant part of all of this. In national accounting, there's a beautiful identity. The total value of what is produced and sold has to equal the total income earned by everyone who produced it. It just has to. Therefore, in our model, national income is equal to the net domestic product we just found.
And that gives us our final answer. The national income is $1,330 million. We did it! We took a totally scattered list of data and assembled a coherent picture of the entire economy's production and its income. Case closed.
So, we've gone through all the steps, we've navigated the mechanics, and we've found our number. But this all leads to a much, much bigger question, doesn't it? What does a single number like this truly tell us about the well-being of the people living in that economy? It's the perfect question to end on, and definitely something to think about.